Okay, students, here we go. We're going to talk about Chapter 7. We're going to do the first four problems in Chapter 7. Problems 17, 20, 28, and 29. So in problem 17, Graves Corporation was incorporated in 2018. Remember, following 2017 tax years, so this would apply to this problem, 2018, I can only use 80% of the current year's income as an offset with my NOL. And unlike prior to 2017, there is no carrybacks of NOLs, only carry forwards, but the carry forward is an indefinite carry forward. In other words, I can carry it forward as long as I'm in existence. So here we have 2018, a $35,000 NOL. In 2019, we have $47,000 worth of income. If we take 47,000 times 80%, that's $37,600. So in 2019, we're going to be able to use the entire 35,000, which produces then a net income of $12,000. In 2020, I then have a loss of $21,000. And because there's no carrybacks available, I have income in 2019 of $12,000, and I have a NOL in 2020 of $21,000 that I can carry forward to future years. Okay, so for problem 20, I need to define a couple of terms. The first term I need to define is recourse debt. And what recourse debt means is that me as the borrower, I have personal liability for it. In other words, if the debt does not get paid, they can come against me personally. The other one is non-recourse debt. And if the debt is non-recourse, that means they cannot come against me personally. They can only go in and take the property that's the security on the debt. Okay, so at-risk rules. We talked a little bit about at-risk rules in the introduction to this. But basically what the at-risk rules say is that I can only deduct losses to the extent that I have personal liability, that I'm at risk of losing money. So the first thing I'd be at risk of losing would be any initial investment that I've made. So in this example on page problem 20, he invests $30,000, and so he has that amount at risk. The second thing that we could have at risk then would be borrowings that I've made that I have personal liability for. That is recourse debt. Remember, I talked in the introduction, I talked about this standby letter of credit. That's what that was a liability that I had personal liability for. Okay? So, in this problem, I invested $30,000, and here we assume that the debt is non-recourse. Okay, so my at-risk amount is $30,000. The debt is non-recourse. In this problem, it doesn't appear to satisfy the exception that allows for people that are engaged in real estate. So that's my at-risk amount is $30,000. I have losses of $24,000 in that first year. That leaves me with an at-risk amount then at the end of that period of time of $6,000. $6,000 then would be my at-risk amount at the end of the year. Okay, so now let's talk about problem 28. Aretha and Bettina own 10%, 10-unit apartment complex. Aretha owns 60% interest in the apartment complex, and Bettina has a 40% interest. Aretha is an investment banker and spends 120 hours helping to manage the apartment. Bettina is the co-owner of a real estate agency where she works 1,600 hours a year. She also spends 520 hours managing the apartment complex. During the year, the apartment complex generates a loss of $24,000. Aretha's adjusted gross income before considering the loss of the complex is $175,000 and Bettina's is $115 or $162. So, all right. So let's go and look at page 712, the real estate professional exception. Okay, so let's first talk about Aretha. Aretha is an investment banker, doesn't have anything to do with real estate trades or businesses. So Aretha cannot qualify as a real estate professional. Bettina, on the other hand, works for a real estate firm, spends 1,600 hours a year in the real estate trades or businesses, and therefore satisfies bullet point 1. More than 50% of the time is spent in the real estate trades or businesses, and number 2, 750 hours. The third bullet point, and she owns more than 5% of that firm. And the material participation tests that I talked about previously are this 500 hours or I work 100 hours and it's more than anyone else. The problem says that Bettina works 520 hours in this on this rental complex. And so therefore, Bettina then can qualify for the real estate professional exception. And the total loss is $24,000. Times 40%. I think that's $9,600. And so, therefore, Bettina's going to be able to deduct $9,600 on her tax return. Aretha, though, is not a real estate professional. And so her fallback position then is this active participation. The problem with Aretha and the active participation, remember there's that $25,000 amount, but there's this phase out from $100,000 to $150,000. She's at $175,000. She's over the phase out, and therefore Aretha is not going to be able to deduct anything. But she's going to be able to This loss then that she has, what is it? Maybe, let's see, 24,000 times 0.6, 14,400. This 14,400 of her loss then is a suspended loss that she can use at a point either when she has passive income. She could use passive income to free that up, or in the alternative, when she disposes of the interest in a taxable transaction that could be realized. Okay, in part C, because Bettina is a real estate professional, her reduced net income does not make any difference. But for Aretha, it makes a difference, because now she's at 140,000. 150 minus 140 is 10,000. Am I right about that? 145,000. 145,000 gives me 5,000. Divided by 2 is 2,500. Then of the loss then that Aretha can take under the active participation rule. All right, I think that takes care of problem 28. All right, now let's look at problem 29. Carlos is a 25% owner in CEBJ Builders, the company that specializes in residential construction. The other 75% is owned by three brothers. During the year, Carlos spends $1,800 a year managing the operations. He is also the 100% owner of 4 rental properties and spends 125 hours a year maintaining the properties, more than any other individual. During the current year, the 4 properties generate a loss of $18,500. His adjusted gross income before considering the rental loss is $118,000. All right, so these facts as they're originally presented: number one, he owns 25% of CEBJ, so I can use the time that I spend working for CEBJ in determining whether he's a real estate professional. He meets the 50% test and the 750-hour test. And he materially participates in the activity, in the rental activity, because he spends 125 hours, which is, and it's more than any other individual. Remember, it just has to be more than 100 hours and more than any other individual. Therefore, Carlos, in the facts as originally stated, Carlos can then deduct the entire $18,500. Now, if we go down to part B, Carlos's ownership interest in CEBJ is only 4%. Remember, the test is he has to own more than 5%. Because he doesn't own more than 5%, he cannot qualify as a real estate professional, and therefore he's limited by the active participation rule. His income is $118,000 minus $100,000 is $18,000. Divided by 2 is $9,000. We then take this $25,000 minus the $9,000 gives us $16,000. that he can deduct immediately, and $2,500, which is going to be suspended loss. Sorry, not 25,000, 2,500 for my total loss then of 18,500. Okay. Part C. He spends only $600 managing CEBJ, 1,200 hours managing a microbrewery company. Again, he fails. He fails both the 750 hour and the 50% test. Therefore, he's not a real estate professional, and we end up with the same result. And part D, he hires his brother, and his brother-in-law spends 225 hours. He spends 125 hours, and therefore he does not materially participate in the rental activity, and therefore we're now back at the active participation, the same result that we had in the others. Okay, class, there you go with those 4 problems. We'll continue following the syllabus. I do want to add 2 problems, and that's problem 34 and 35, if you'll do those for next time. Those 2 problems get a little tricky in how we do those allocations between activities, because remember, these losses are suspended, and they're suspended up until the point when I dispose of them, which means when I have passive income, we need to allocate that passive income to those passive losses to determine how much is a suspended loss. And so that's really what 34 and 35 are getting at. And so if you will do 34 and 35 in addition to those other problems that I've asked you to do, and I will talk to you tomorrow. Have a good day. Enjoy your time. Thank you.